This is Jim Juback for Juback Asset Management video on Friday, September 6th, after a long hiatus. I'm in Sicily right now, which is very, very, very conducive to not doing much work. So, sorry about this, but I'm back. And maybe we'll keep this going for a while. Okay. I wrote a post the other day about how the September sell-off was déjà vu for the August sell-off, that it was all based on unwinding of the yen carry trade. And one of the reasons to think that was that the August sell-off was caused by the Bank of Japan unexpectedly raising interest rates by 25 basis points to fight inflation. People were expecting that, but later in the year. Now, so there was a one-to-one, I think, correlation between that, because what happened when that announcement came out is that the yen rallied, which meant that people who were in this carry trade, which basically involves borrowing yen at cheap rates, since zero interest rate, and then using those yen to buy dollars and then buying dollar assets with that. When interest rates on the yen go up and the yen goes up, this trade becomes potentially a loss, because paying back the yen that you borrowed gets more expensive. So there was a big sell-off of dollar-denominated assets for people to close out those yen trades. Same thing seems to have happened in early September. And the catalyst for this was an announcement from the Bank of Japan that it would probably be raising interest rates again to fight inflation. Didn't put a date on it, but most people think December is the likely timeline. And the problem in Japan is that while inflation in the U.S. has been going down, inflation in Japan has been very tough to get under control. In 2023, inflation was up to 3.3%, which is horrendous in Japanese terms. In 2024, the Bank of Japan got it back down to 2.7, 2.8, but in July, the core inflation rate, which was only 2.7, but it was actually up. So going in the wrong direction, so banks has clearly got to do something. So we're looking at, again, another round of unwinding of this trade, which means selling dollar assets where you've got a profit. Let's take profits in NVIDIA and use those to sell, use those to buy, pay off the yen. The question is how much of this has been unwound. JP Morgan says 75% of the spot currency trades in the carry trade have been unwound after August. That's a guess. Other people say, well, 200 billion to 250 billion were unwound in August. The problem is that getting a handle on how big the carry trade is, how much we're talking about here, you're all over the place. The Bank for International Settlements says, well, yen carry trade is probably somewhere around 764 billion. So if we've unwound 200, 250, we've still got about 500 billion to unwind. Not all of that is sort of speculative money. They say, well, about 175 billion in hedge funds or yen short positions. Reuters, on the other hand, puts the yen carry trade from its sources, puts the yen carry trade at 7 trillion, in which case we've got a long way to go. So remember, the Bank of Japan just said that it was going to raise interest rates again, probably in December, depending on what happens with inflation. So we're looking at volatility in the yen versus the dollar. Doesn't help that we've got a U.S. election with very, very different takes on what we want to do about deficits and taxes and all that, which makes the dollar volatile by itself. So we've got a volatile situation here in a time, September, when we always have volatility in the market. So basically, I don't think there's anything fundamental going on here. This is a speculative trade that's being unwound, but certainly it indicates how difficult it is for the financial markets to go from a world where there was just money sloshing around everywhere to a world in which some money sometimes the money doesn't slosh quite so much. So more volatility from central banks, and that's what I think you're going to see. Now, if you like this video, please give it a thumbs up, and go to my websites and get more of my stuff. You can go to my free website, which is ubagpicks.com, or you can go to my paid website, which is ubagassetmanagement.com, and that's got more portfolios, more stories. The free site probably has 1 to 2 posts a day. The paid site has 2 to 4 posts a day. More portfolios, including a volatility portfolio and a very short-term portfolio and an ETF portfolio. So all of those things, and you can find links to those down below. So thanks for watching. See you next time.